In 1996, I was living in Madras, India. There is no Madras, India today. It is now called Chennai, India. After the Brits left India after 300 years, they left in 1947. The Indians took over their own country. And at the 50-year anniversary of India ruling, or Indians ruling India, a lot of the names of the major cities started changing. So you don't have Bombay anymore, you have Mumbai. You don't have Madras anymore, you have Chennai. But when I lived there, it was Madras. And I was done working. I was working for a medical software company, medical software and hardware. I hated my life. My body was in pain. I ate horribly. I was in, an airplane or a hotel flying around Asia 27 days out of the month. It was just a horrible existence. So when I came home, I knew what I wanted to do. I knew it was going to be about investing. My two loves or passions had always been Asia, specifically China, and investing. So I kind of got the Southeast Asia bug out of me, and I was kind of immigrating home to the U.S. And I started with commodities. And I loved trading commodities because in 1 year you could have lifetime highs of half a dozen commodities and lifetime lows of half a dozen commodities. Where in the stock market, it may take you 15 years to see a lifetime high, and you're never going to see a lifetime low because the stock market really only goes in one direction, or commodities kind of go up and down. And I like that idea of seeing lifetime lows and lifetime highs. Now, the reason I'm telling you this, and the reason we're having this conversation, is because it's my job on these weekly video blogs or podcasts to look at the price charts. And I see price charts not maybe as much of a crystal ball, though it's probably more crystal-y ball than other things, but I see them more of like a windsock. If you've ever flown a plane and there's a windsock on the, right next to the landing field, so you can see which way the wind is blowing. It gives you an idea of direction and helps you kind of position the plane to land. And that's what price charts do for me. They tell me what is going on. And there's some very, very, very interesting things that are going on today with one specific sector, one type of commodity that I want to share with you. Hey, everybody, this is my weekend podcast. I kind of bumbled those words a little bit. Hey, everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is From Zero to Hero. And what I want to do is I want to show you one price chart. I have two total price charts in this podcast, but I want to show you one price chart of what grains have done basically the last 13 months. So over the last 13 months, grains are down, if you take away the last week, grains are down 40%. 40%. Now, specifically corn, wheat, soybean. Soybeans are actually only down probably about 20%, but corn and wheat are down about 40% over the last month. Now, if you put that into comparison, the S&P over the exact same time period, again, let's call it 13 months, is up 12.5%, right? So we have a huge difference here of what's going on. Now, in the last week, just the last week, grains are up 10% just in the last week. But grains have been going down for a while. Grains are very hated. And so I think we have an opportunity here. I think there is an opportunity here. Now, you can buy grains through the ticker symbol JJG, or you can buy wheat through WEAT, or corn through CORN. But right now, we're looking at some pretty solid price stability underneath where grains bottomed a week ago. And it wouldn't surprise me if... Now, look, I'm not saying the bottoming is over, though. They've been bottoming for many months. In fact, you can see an old bottom in the end of September of last year. So this is kind of the second bottom for grains. This orange line is JJG. But what we have here is a potential, how do you make money when maybe the market's going sideways or it isn't going up as much? But what's just most important is not necessarily why you should be or should not be in grains, but how price charts can really give you the insight to what else is happening, and really quickly, a really quick snapshot. So one of the things that caught my attention this week was grains. And again, the orange line on the screen is JJG, and it's a combination of grains. And I think some very interesting things are happening with it. Now, I want to show you one more price chart, then I will hit the pause button. Utilities, this is a weekly chart going back to the very, very end of 2008. And on the screen, you see the black squiggly line, which is the closing price of utilities, XLU, for each week. Then you see two blue lines kind of going up at a 45-degree angle. And then lastly, you see a red line that's kind of trailing under the price of XLU. And that is the 200-week moving average. It is very likely, right now, momentum has taken over on the downside with XLU and utilities. And should they be falling as much as they should? Probably not, but what does should really mean? I'm going to start really paying attention when this hits right around $39.60. Now, I don't know if XLU is going to hit $39.60, but if it does, and let me just tell you, more times than not, sectors, ETFs, stocks, they hit actually my downside target, and then I start paying attention. So that's about 5% away, and once it hits that, then I'll start paying attention to see, is there going to be a turnaround? Is there a bottoming going on with XLU? So I just want to bring that kind of attention or awareness to you that utilities are not down and out. Look at this price chart going back 6 years, clearly in an uptrend, got ahead of itself in 2014. It's correcting to the downside, but clearly it is still in a uptrend. And somewhere in our near future, we have a potential turning point for XLU. So again, the price charts clearly tell us what's going on. And like a windsock, doesn't give us every piece of information, but it really helps us determine when we should be paying attention. And not quite yet to pay attention to utilities, but soon we will. So the big takeaway really for this week is grains could be really, I think they might be the best asset class for the second half of 2015. Now there's some competition. China could turn around right now. China's in a pretty big correction, pretty big, relatively speaking. They're correcting right now. I know the A shares on the Shanghai exchange were down, I think, almost 10% today. It's Friday today. I'm recording this. But, keep a lookout for grains. You do not have to invest in grains. You can stick with just market probability. This is something kind of more interesting if you don't want to get into it, and you don't have to invest in everything we talk about. But the big takeaway is don't be surprised if grains really are one of the best asset classes for the second half of 2015, which has not started yet. It starts in about 4 or 5 days. Everybody, this is really just another step in helping you secure your portfolio and secure your future. Until next week, this is RC Peck. Hey, everybody, thanks for being here. I appreciate it. I appreciate the listening. And really what we do here is we figure out what we have to be paying attention to, and we use price charts to eliminate the noise to find the signal or to find the point in time where we should be paying attention. And one of the biggest things I hear from people, and I've been doing this for 18 years, working with people and helping them protect and grow their money, is I just have so much information, RC. I have 10 newsletters. I'm listening to you. I'm listening to other things. I go to weekend workshops. I just love this. Or some people don't love it, but they feel they need to spend all this time on it. And it doesn't have to be that way. You don't have to put all this time into it. It's one of these weird things in life where more time and more energy into growing your money in the stock market is actually going to make it perform worse. And so one of the things you may want to consider is just getting a portfolio strategy review with me. Very straightforward. We put everything on the table. I give you an unbiased, conflict-free point of view and point out to you how you can bring in a huge amount of simplicity, which means strength and straightforwardness, and really just acting ordinary, but getting maybe extraordinary results from it. It's so easy to do that. You can just email Patty at Fearless Wealth, and we can go from there. All right, guys, you take care, and I'll speak to you soon.